as we welcome our panelists for our session on democratizing wealth creation, leveraging technology to enhance capital access and inclusion. We have amongst us Mr. Gaurav Kumar, the founder and CEO of UB. I'd like to welcome him with a nice warm round of applause. We also have amongst us Mr. Swaminathan, Managing Director and CEO, Geo BlackRock AMC. I'd like to welcome you up on stage, and let's keep the applause going, ladies and gentlemen. We also have amongst us Mr. Vijay Shekhar Sharma, founder and CEO, Paytm. Welcome, sir. And I'd like to invite up on stage Mr. Amarjeet Singh, whole-time member, WTM Securities and Exchange Board of India, who will then now moderate this session, and we're looking forward to active participation from each and every one of you. Welcome, gentlemen. Please do take a seat. And I request Mr. Amarjeet Singh, sir, to kindly take the session forward.
Thank you. So good afternoon, everyone. It's a pleasure to welcome all of you to this session on democratizing wealth creation. This topic, I believe, is very timely, especially with our markets buzzing very actively as we speak, the kind of momentum that we've never seen before. Retail participation, just to give you a little flavor, retail participation, as many of you would know, is at all-time high. Rise of digital platforms is actually transforming how Indians invest in the markets. While access is expanding, a large segment of our population still remains outside the formal market ecosystems. So just to give you a data point, there are about 12 crore investors, unique investors, as per the NSE database, and you have about 66 crore PAN holders, which are linked with Aadhaar database. So the gap is huge, and there's a huge potential to grow further. We also have a very vibrant startup economy, and we have three stalwarts sitting here. Yet much of that wealth potential remains concentrated within private markets. Now, there is a bit of a competition between private markets and public markets, and that's the subject I want to touch upon today. So how do we, as I said, wealth potential remains concentrated within private markets. So how do we open those doors wider? That's what we will unpack today, how technology can help bridge these gaps by creating smooth pathways from private to public markets. How can we enhance last mile accessibility and ensure inclusive and responsible growth? We are privileged to have a very distinguished panel with very distinct and rich perspectives. They don't need any introduction, but very quickly. So Vijay Shekhar Sharma, the founder of one of India's most well-known startups, he brings the experience of steering a new age tech company from private to public markets. And if I can share it with you, when Vijay was doing his IPO, that is few years back, so we called him over along with his team. We wanted to understand his business model a little better. So he came with a big team of merchant bankers and his senior officials with him. And then he said he will make the presentation. And I still remember a very passionate presentation about what he was doing, what he was setting up, and what his vision was. Sid is MD and CEO of Geo BlackRock Mutual Fund, offering the mutual fund industry's perspective on retail participation and financial inclusion. And of course, Gaurav, founder and CEO of UB Global, he called on me very recently, and I was quite impressed with his thoughts and vision on Fintech. A Fintech innovator bringing in the perspective of how technology can enhance access to capital and expand market participation. So without further ado, let me get into the discussion with my esteemed panel. So our discussion will unfold in three parts. The first round, I want to cover broadening access and participation. That syncs with the theme of the panel. The second piece will be on investor protection, and the third piece, if time permits, I'll do a fun round with them, some rapid fire questions with one-line answers. So let's begin, and I'll start with Mr. Vijay Shekhar Sharma.
Check.
So Vijay, as I mentioned about private markets, so private markets, as we all know, fuel innovation with flexible and patient capital. That is the main attraction of the private markets, while public markets drive inclusivity and wealth democratizations. As regulators, we are interested in both. We seek more high-quality listings, of course, to build resilient markets. So how can we create effective pathways, if I can call it, between the private market and the public markets in the country? And your experience, based on your experience of transitioning from public to private markets, what regulatory reforms or investor readiness measures would smoothen this migration from private to public? And lastly, how can technology help?
Thank you. Thank you so much. First of all, for everybody in this room, I have one statement to make. I remember way back when Sir is talking about that I went there to make that passionate pitch. This is a few months before. I also happened to be in a meeting in Delhi in government where myself on behalf of our company and a couple of other companies, we were making a pitch to government that allow us to list internationally because of the market size or size of fundraise or size of the market cap and so on. I still remember not naming the person because it is sensitive, but the person in the room said that we need to see you as Indian company listed in India, and we want most of all of you to remain an Indian company. And that decision, I said, but I have to say this, ma'am, you can guess who it is now. The idea is that maybe the approval for listing in Indian market does not happen for companies that have a loss-making history of last 3 years, and that sort of is a trend. And I think that they said, go ahead and have a discussion. It is not sort of a rule, but I'm sure regulator would understand. And that is the time I got a chance to see Sir and the whole SEBI team. And I can say this very proudly. The decision taken to list some of us early on in 2021 made this country the most vibrant and the best market to raise the capital in the world. And none other than SEBI, I would say, is responsible or the chair for this. So I want all of us to cheer for the SEBI in this role. And the best thing I want to tell you, sir, is that the discussion, when you go to regulator, if regulator asks you to meet, it's very uncomforting of you're not sure because this is not a very normal meeting where you are used to of meeting. You're not sure, like, what should be the answer in a perfect manner or not. But the experience was so profound that Sir is able to say that it was a passionate meeting. It means the vibe I was getting back was so much acknowledging the good thing we were hopefully going to do in terms of when we go to list public market. So here goes the first and foremost rule of thumb for a private market company to go to the public market. That public market regulator must be welcoming and inviting to the private market companies. That is actually the beginning of it. If the regulator or the owner of the market, I would say in a sense, is acknowledging the need and want and desire, and that is the beginning of the journey. And second, like you suggested, sir, it is also about a number of investors who are ready with it. And there is no doubt about it, investor education about the companies is complex. I mean, investors invest on a very flimsy amount of information or judgment. And I remember the discussion I had with you was that the front page newspaper ad that comes with a lot of information, how about making it a QR code that somebody can scan and then see the business presentation? Because if you all know, when a company goes for public listing, there is obviously a press announcement. And that very page may not have the necessary information that you are going to make decision. It does have the necessary risk risk factors, but it has a risk factors, not the business information, so to say. And I can say that I've seen some newspaper ads lately. So I'm going to say the information that companies provide should be made more accessible in a layman language, whether it is a video or whether it is a presentation or whether it is a sort of conversation to a common person, by showing that here is our promoter, here is our management team talking about the business for why should you invest. And then obviously you can have a couple of other advisors or analysts so to also link there. But at least there should be an opportunity in a more formal manner, not just a road show which happens to a set of people but not everybody else. So this is one matter that I fundamentally believe is missing, where a sort of select audience, even though it is public, in a way that, let's say you are in a particular city, you are talking to public market investors, but you still are not giving access to that same content or same conversation to a much wider or everybody by default. Post-listing, under LODR obligation, you are supposed to upload every information. But how about pre-listing? That we have a conversation, there should be an opportunity of a voluntary giving an information. And in the newspaper ad, when it shows up, the company is able to make a pitch. So I'm going to say, number one, the regulator should be inviting, which I must say there is check. Then second is the company should be able to give more information. And third is nothing but, I would say, continuous inputs. If you see there is a mutual fund Sahi Hai initiative by MFI, and that has been very good success, I would say investment bankers should make IPO bahut acha hai. And they should run the campaign on behest of their own community that IPO बहुत अच्छा है, IPO में भी invest करें, यहाँ पे आप नई बार कंपनी को मिलते हैं. So मेरा ये दो input होगा.
No, yeah, thank you. So, if I can respond to your regulators should be welcoming. We are very welcoming, and not only that, we had to cross the bridge in terms of allowing loss-making companies, not only loss-making, but also no profit in sight for the next few years. Companies bleeding every day in terms of cash flows. So we had to cross that bridge with adequate safeguards for investors, which we did. But anyway, today I'm not supposed to be answering. I think you are supposed to be answering for a change. So let me...
I really mean it. We've done a very good job as a country of expanding the I would say stock market and wealth creation. The importance of IPO as its risk and reward should be more responsible towards the investment banker and the company to give more information or more videos beyond just a printout, including a QR code or including URLs that know more about us.
So, recently we brought in a requirement that the company has to upload a small video about the IPO highlights. And
yes. So I saw that, and there was a QR also in one of the DRHP.
So your suggestions are being picked up.
Very good, sir. Thank you.
So, right, so let me move to Gaurav now. Gaurav, my question to you is about the trading opportunities in the unlisted space, and let me give you a bit of context here. So we are seeing a trend where companies are choosing to stay private for a long time. And resulting in, this is not for India, let me say that very clearly, this is more of a global observation. There is a decline in the IPO markets in many jurisdictions today, and lack of opportunities for retail investors. In India, we are lucky, while the mix is healthier, a large part of the wealth creation opportunity still remains concentrated in the private market space. The so-called alpha, people are moving to private space. A number of online platforms are attempting to bridge this gap by enabling retail participation in private companies, sometimes with ticket size as low as 5,000 rupees. So what is your view on these trends? Should there be regulated platforms for trading of unlisted shares for better investor participation and protection, as well as serving as a pathway for companies to transition from private to public markets, and also how can technology facilitate such transition?
Sure. Thank you. And I think one point which I will also I resonate with what Vijay said. I think, look at the regulator. One thing could be to shut the door and take interest on what is happening on the private market. And here the kind of dialogue which the regulator is happening with most of us in the ecosystem is to really think through this more as a continuum and not think through this from a jurisdiction saying, okay, I'm regulating something which is around public market. So, let me kind of have those walls much higher on what is happening in the private market. So I think that, to my mind, like Vijay said, has been really, really refreshing in our own engagement with SEBI over the last many years now. What we are seeing, and I just wanted to leave some thought to what Sir said, largely in three parts. So if you look at what is happening globally and what is happening in India, you are now largely seeing a very, very well-oiled continuum on the private market side, where you are seeing, large amount of money coming into venture capital. The venture capital guys taking a lot of risk and backing a lot of startups, like many of us in the room. And then you are seeing that continuum going to growth capital, from growth capital to private equity. And last 2 years, if you look at globally, most of the large funds, they are actually transitioning to something called perpetual funds, right? Where they can actually hold companies private much longer. And in fact, the jury is out where they're saying, why do you want to go public? You can actually remain private and keep compounding, as long as you want. And we will provide you liquidity, and we will provide you access to capital which is required for you to remain in the public market. And their pitch actually to the founders and shareholders is, as you go public, you will have tremendous amount of scrutiny, and then you will have quarter to quarter outcomes. And if you're building something long term, do remain private for a very, very long time. What we have started seeing that in India, just to leave it with you, I think again, one of the initiatives taken by SEBI, to my mind, 3-4 years back, when SEBI came out with a clear category around online bonds platform, right? And we have been talking about deepening of debt markets for the last 20 years. And what we are now seeing with SEBI's initiative and a lot of platforms which are out there, we have started seeing a lot of private companies now accessing debt on the listed side, right? But what we have also started seeing on the equity side, as you must be seeing, that a lot of family office participation has started coming in on the private side, right? So you're seeing new class of investors, whether it is family office, ultra HNIs, and some of the retail participants trying to come and get a share of that private market, but that today is very, very limited, right? And to a certain extent, what Vijay was mentioning, even on the private side, what we see is that access to that private company is limited to very, very few, I would say, fund houses and family offices, right? Now, what is happening is you are seeing a steep curve when a company is actually moving from remaining private for 10, 15 years and all of a sudden going public. What we have started seeing, just few data points to what Sir said, that when a company, and you must be seeing it over the last 2-3 quarters, that when a company is actually going public, you're seeing the price of the shares actually at a much steeper discount to what those shares were actually trading in the gray market, right? And you have very less information to what Vijay was mentioning about the same companies where you're seeing volumes and volumes of investment and securities being traded in the private market. I think what technology has done is given that access to a very large number of investors now on the private market side. We are seeing those numbers scaling significantly. And now if we have that kind of platform, a regulated platform I personally and truly believe that we have a regulator which has phenomenal open mind, right, to see this market being very, very vibrant, right? And for every company, this is almost like a journey and continuum. So what a regulated technology platform on the private side will do, first, it will build tremendous amount of transparency. Second, I think a lot of investor education around pricing, around governance, around what the company is all about, and then also gives that company a very clear journey on how they should be transitioning from private market to public market. And I think if that's the case, if the company needs liquidity, they will have enough and more forms of liquidity opportunities, and they don't have to actually go public. And last point I will leave it with you is that today, if you look at a lot of private companies, they should actually be going public when most of their leading indicators and lagged indicators are actually in green, so that you're not exposing a lot of volatility after you're going public, right? So if a bridge and continuum is provided between the public market and private market, a lot of companies can still remain private, but still will benefit from some of the perks of going public.
Yeah, I think a lot of interesting points you made, and I think we need to pick up this conversation in more detail separately. Sid, turning to you, this question is more from the retail investors' perspective. While India's retail investor base has grown exponentially in recent years, as we all know, still only about 10% of Indian households are invested in equities. What tech solutions can boost last mile accessibility, particularly for rural and semi-urban investors, to further democratize public market participation? What is the most promising distribution model, according to you, for achieving this, and how can we as regulators facilitate?
Yeah, thank you. I think it's obviously a very relevant question for us, and we're just getting started, but we've already had a lot of learning. So, hopefully, I can share some from our journey so far. What we are observing is that, and we've talked a little bit about this already in terms of the education and the building of the trust, right? I think those two are firstly key, because once we get that right, what we have already seen so far is that the technology and the phone is the biggest liberator, equalizer, whatever you want to call it, right? And now there's a fantastic job being done already by SEBI as well as AMFI. We talked about the mutual fund Sahiya campaign, but I think we can go a step further on that front. I think, with the technology that we have now with AI, there is really the ability to deliver educational content that is hyper-personalized, regionalized to every corner of India. I think that's a reality now. And this might feel like science fiction to a lot, but it's not far away where you can, let's say, deliver an educational piece about a fund or a stock that's going to come up, and it gets delivered to an individual, but then, let's say, reprogrammed by AI into a content that is more, let's say, natural to them. Like it could be someone's a very big cricket fan and it just gets delivered in cricket analogy so that they understand it better. Like the entire goal has to be to simplify and then do it in local languages. And I think with the technology that we have now, that's becoming more and more possible. So I think that's one very important enabler. The second piece is frictions. So once you have built, let's say, the education, once you build the trust, people are very willing to come on their phones and let's say, do things in the financial markets. But then the frictions from that point onwards have to be reduced. So I think while the overall financial tech stack here is, way, way more advanced than anywhere else, definitely more than the UK where I've come from, I still think there are elements where, things like KYC and onboarding could be a lot smoother. Once the user has provided the content or the consent, the data is already there, and for them to be able to onboard to a new service provider should be made as easy as possible, because that's really, attention spans are reducing as time goes on. So I think, and that's an easy one in most ways, I think. And I think any help we can do from a regulatory standpoint there would be massively helpful in kind of growing the investor base. And then I think finally, in terms of the distribution, while I see this, pure digital model, working really well, when I said we're just at the beginning of what we're doing, but even in the small sample set that we have in our 3 months of launch, we can see over 10% of the investors that have come in are completely new to mutual funds. So, we're still only scratching the surface. There's a long way to go, but we're starting to make a difference. So I think that's really good to see. But I think as we want to, let's say, get further up that curve, we will need to find ways to supplement that with some physical interaction as well. Right? So there is going to be always a segment of the population that needs that human touch, that needs to talk to that human being right at the end to help them make their decision. So I think, to get to the kind of hyperscale that we want to get to, we're going to have to really, really push on the digital and then complement it where necessary with some physical distribution.
So very quickly, at a broader level, how has been your experience so far in terms, you talked about your launch the last 3 months. How has been the broader experience?
Yeah, I think for us, it's been very positive, is what I would say. Like for us, we came to the market with firstly a very differentiated set of products. So we didn't really have a benchmark for how we would think about, let's say, success for now, to be perfectly honest, right? We had a set of funds that we were bringing with differentiated ideas. We're doing one right now. We are direct digital in a market that is predominantly driven by physical mutual fund distribution. But just the level of engagement that we're seeing from investors, to the content that we're putting out, and most of our content is all educational. That's really been positive, and kind of the participation that we're seeing through each of our NFOs for us is way beyond what we expected. So that's a really, really encouraging sign. Now, again, to your point from earlier, we're still at a very low base. So the potential is immense. So for us, we just want to keep carrying on this track, keep executing, and I think the people will come.
Right. So Vijay, I'm tempted to ask you one more question since, you made such a nice shift from private to public markets. And I remember having some conversation with you at that time also on this question. So in the IPO space, what tech or policy shifts could encourage disintermediation or alternative listing models? And pardon me, the merchant bankers in the room won't like this question. Do you think there is an appetite for direct listing in India on the lines of what Spotify did several years back in US? How can technology facilitate disintermediation? Also, one more point, any thoughts on improving the SME IPO space? One more request, as a timekeeper, I'm mindful of, so keep your answers short from now onwards. Thank you.
So first of all, I want to tell you, sir, that the amount of time it takes for IPO to open and close, that length is too large. And because of that, sometimes the price movement from institutional round to public round also becomes dramatic. It was especially case for us. So I remember that amount of time it takes. Now to solve for that, we should do CBDC, digital coin, central bank, RBI digital coin, because the settlements are instant and immediate. And there is a wholesale blockchain settlement committed, all sorts of things. So number one advice I would say is that whole of the IPO process should move to CBDC, because then the settlements and the rules of settlement will allow the process to shrink to a near real-time level, and then we will be able to do this exercise of the complexity of the process. Currently, the process has many hops and complexity of different obligations, which a standalone company cannot execute, unlike in US, where even Google did a self-listed IPO or Spotify did a self-listed IPO. I do believe that the best way to think of financial services is tends towards DIY, tends towards real time. That's the rule of thumb of all financial services. Tends towards DIY, which means like what you're saying, 100%, and real time, which is CBDC that we need to put into it. And that's it. These two line items I would do on this, sir. And SME space is, I'll continue to go back to open.
See, we need to encourage good quality SMEs.
Yes.
And we need more of them, right?
Yes, sir. Yes.
How do we, and we are somewhere falling short.
Sir, SME IPOs have less interest because investment bankers have less percentage of money to make. So there is even further obligation of a tech or tech-enabled, just like you allowed new mutual fund companies. You should allow new investment bankers who are tech-enabled, and their efficiency and efficacy is so low cost that they are able to publicly invite public subscriptions. Let's say there is a technologies platform. You're understanding what I'm trying to say is that SME could be the place where you allow intermediary to be a completely tech-enabled and allowing least cost-based IPO. Right now, the reason for SME IPOs not to have so much of excitement is that rest of the banking ecosystem, investment banking ecosystem, does not make large money because the IPO size are small. So you need new age, young companies, all these of us that who are brokers to the discount brokers to the mutual fund operators that you've seen, and you're seeing the kind of new investment excitement we are seeing, and you are seeing that there are all kind of new products that are coming in the market. If we only add the variable, which is called new kind of investment banker, who are DIY and on a public listed, I'm sure there will be a newer kind of market there.
Okay, we'll think about that. So let me move to the second round. This is on investor protection. So my first question is to you, Gaurav, on the governance failures and frauds in companies, which unfortunately keep happening from time to time, especially in the SME segment, which I was just talking about. How can technology and data analytics help in flagging these risks at an early stage?
I think, sir, both points, as you rightly said, and Vijay was answering, I think if we are looking at something which is almost like a digital twin, right? Because today the risk perception, if you look at on the SME side, is perceptually much higher, right? Because of limited amount of information, the size of some of these IPOs might be limited, and there is not enough data which is there in the public domain, given some of these companies which are going and getting listed on the SME platform. What we need to see there, sir, is largely a continuum of moving from static risk to dynamic risk, right? And I think if we're able to build a digital twin, to Vijay's point, where you are able to, because today if you look at all the infrastructure which is around us, which is your entire ITR, GST, all of this, which is largely going and feeding into your lagged indicator, which is nothing but your balance sheet and P&L, right? And what is the degree of validation you are able to build, tying that back with your debtors, creditors, right? And as well as related party transactions, right? So today, I think there is a great opportunity to almost use AI and build a digital twin and embed that on the SME platform, where thereby you are able to transition what we see today as static risk, which is much more form factor reporting at a lag, and that's where a lot of governance issues start creeping in. Last point I'll leave it with you, sir, is largely not only breaking down the P&L and balance sheet and tying that into the digital twin, also looking at non-financial information. Because wherever we have seen these kind of governance issues coming in, there has been a lot of chatter in the underbelly around in social media and very different prints, and you are able to actually embed that and build a lot of early warning signal. So I think this is a great opportunity to build a digital twin in this space.
सर मैं एक बात बताना चाहता हूँ, हम सब लोग आईटी एंट्रेंस या सीपीएमटी की एंट्रेंस ट्राई करते हैं और 10वीं 11वीं से पढ़ना स्टार्ट कर देते हैं. तो ऐसे ही अगर सेबी रिकमेंडेशन दे दे कि आपको अगर लिस्ट होना है तो आप पहले से ये पब्लिक इन्फॉर्मेशन पब्लिक प्रोवाइड करना चालू करें, एक फ्रेमवर्क एसएमईज के लिए और लार्ज कंपनीज दोनों के लिए, तो कंपनीज पहले से तैयार होना स्टार्ट हो जाएंगे. दे विल बी मोर इन्फॉर्मेशन एंड दे विल बी मोर डिसिप्लिन एंड मोर एक्नॉलेजमेंट ऑफ व्हाट इज कमिंग फॉरवर्ड. माय आइडिया इज कि मॉक कैट जैसे होता है, ऐसे मॉक जेई जैसे होता है, मॉक लिस्टिंग करवा दिया.
आप कह रहे हैं कि ये दिस कुड बी ऑन अ वॉलंटरी बेसिस.
वॉलंटरी बेसिस, जिसको इंटरेस्ट है, मतलब जो आप जानते ही हैं, आप एज आप जानते हैं जो जेई एंट्रेंस देते हैं वो 10वीं 11वीं से पढ़ना स्टार्ट कर देते हैं. तो ऐसे जिनको लिस्टिंग करनी है 2 साल बाद, वो पहले से अपनी इन्फॉर्मेशन एलओडीआर वाली लिखना स्टार्ट कर देंगे. कोई ऑब्लिगेशन नहीं है, बट जो कंपनी होगी ज्यादा इन्फॉर्मेशन होगी तो इन्वेस्टर भी इसी तरह समझ जाएगा. और आप जितना चेंज करना चाहें इन्फॉर्मेशन उतनी बार चेंज कर लीजिए, आपको आदत भी पड़ जाएगी, बाद में कंप्लाइंस भी ईजी हो जाएगी. तो मेरा मानना ऐसा है कि सेबी कुड ब्रिंग अ pre-listing reference obligation.
But the voluntary disclosure without any vetting, do you think it will create some risk?
नहीं सर ये तो वो है ना, कंपनी जिसको लिस्ट होना है वो अपने हिसाब से अच्छा पड़ेगा ना.
तो they may highlight the brighter side.
तो कहते हैं ना कि let them sell what they want to sell. जब वो बाद में लिस्ट होने जाएंगे तब तो उनको ऑब्लिगेटरी एक रेगुलेटेड इन्फॉर्मेशन के अंतर्गत लाना पड़ेगा. तब वो लोग पूछेंगे आप तो कल ये बोल रहे थे, आप तो यहाँ पे नहीं बोल रहे. सो ऑटोमेटिकली सर मार्केट फोर्सेस टेक केयर वाला मूवमेंट आ जाएगा.
We need to think of some out of the box idea.
जी सर.
This is one of those. The challenge for us as a regulator is, we have to maintain that balance between ease of staying listed, ease of accessing the market, and the investor protection.
मैं तो कह रहा हूँ सर, आप इसमें एलओडीआर ऑब्लिगेशन ही नहीं है, ये तो प्री लिस्टिंग है. जैसे मॉक टेस्ट होते हैं, अब मतलब इंजीनियरिंग कॉलेज में भी आपको पहले से टेस्ट देके ट्राई करना है.
राइट. ओनली रिस्क इज वो अनफिल्टर्ड अनवेरिफाइड इंफॉर्मेशन आएगी, whether it is in the interest of public or not. We need to think about.
Yes sir.
Sir, I think just one point, like you said, I think what we have seen, for example, even on the NBFC side, if I take that parallels to your point, I think if we are able to have graded disclosure and much more frequent disclosure, what is happening today, sir, is that all of this information today, because of the India stack, is actually available. Right? What is that validation you are filing on ITR, GST, आपके creditors कौन है, debtors कौन है, triangulation हो रहा है कि नहीं हो रहा है. But because of the current reporting, we get to know with a significant lag. Right? So if you are an SME with a certain turnover below, you might actually have to do it much more real time or very high frequency compared to a company which is much more matured, sir.
Right. Okay. No, thanks for these ideas. So let me move to you, Sid. We have introduced SIF, as you know, an innovative product recently, and we are beginning to see some traction there. And micro SIPs also, they are designed for low-income households. So we are trying to increase the scope of inclusion. I mean, that is our attempt through microsips at least. However, these do bring in heightened risks of mis-selling, especially if the investors do not fully understand the product like SIF. So how can technology help in flagging instances of potential mis-selling and ensuring that the right product reaches the right investor? Keep it brief, please.
Yeah, absolutely. And yeah, I think these two are classic examples of innovations that are really broadening the market, right? Because you're addressing at one end like a really small min denom, and the other end, let's say an HNI type of investor. So that's great that the market's evolving. Technology, I think, in terms of the ability to leverage technology to perform surveillance, I think is a very powerful tool. And I know SEBI is doing a fantastic job of that already in terms of being able to monitor data. For example, like, are you selling a very high period lock-in product to someone that is, let's say, over 80 years old, for example? I think these things can now be easily monitored. And I think that's super powerful. And the fact that the industry has A, all the data, and B, has made this data available for, let's say, the rest of the industry to look at, but also for the regulator to look at, is super important, because you can combine all of that with the technology to then put in place these checks and balances. And in addition to just the regulators doing it, we're also mandated by the regulations to do it ourselves. So all of the asset managers are also doing that. The governance is super tight in terms of how the products are classified, who are the investors in these products. We're able to see all of that. So I think that's firstly extremely powerful in terms of monitoring. The last point I'll make is that what technology can also enable now is hyper-personalization of the investor's appetite themselves. So you can address it at the source rather than monitoring at the end, where through structured data, unstructured data, you are now able to put together what we call like an n=1 view of that individual, and really recommend portfolios that are personalized to where they are, what state of life they're in, what their goals are, again, so that you can really tailor investment products to individual needs. So we are now able to address it at both ends, at the source and then also at monitoring. I think those are the two big innovations.
Right. So Vijay, one more question for you. So this is on the rise of artificial intelligence platforms that have led to users turning to these platforms for personal finance and decision making. So some of the AI platforms today are offering access to stock market data and company earnings also. What risks does this pose in terms of AI biases or misinformation? And how can we bring in accountability in AI-driven investing tools?
Sir, it's like saying on internet there is every kind of advice. Some advice is from formal authorized channels and some advice is from informal. And technically, because AI platforms will be available in millions of source of questions, it is practically impossible, except that you can certify, just like handle certification that we've done for IPO application, where we can say that this is a SEBI certified and checked that this does not have bias or restriction. So in other words, it will be rather the certification of certain models and certain destination that you will say that this company follows in the advice the restrictions or avoids mis-selling. Otherwise, everything else is anyways available. We can't stop that, but we can promote the acknowledgement of the certified platforms. So instead of stopping, which obviously it is just practically impossible, it's like saying how many internet channels will be there. It is rather better that SEBI goes into SEBI certified AI agents, SEBI certified AI advisors. I would rather say SEBI certified. When I say certified, it is just a certification of the bordering and guideline that it does not mis-sells.
You want to increase our job, right? So
Sorry, sir?
you want to increase our job.
Sir, AI will reduce your job further because AI will report to you कि ये आदमी गलत काम कर रहा था, sir.
I hope so. I hope so. So let's move to the fun part of this panel discussion. So I'll ask them some one-liner answer only you have to give. So very brief answers. It's a rapid fire round as I call it. So let me start, and we'll do 2 rounds. So let me start with Sid. You could just answer in 1 line or 1 word, whatever you wish.
Okay.
It's the single metric that best captures inclusion.
For us, It's the number of customers that we are seeing. That's what we look at, and where they come from. So,
number of customers.
number of customers.
Right. Okay. Fine. So Vijay, for you, one lesson on IPO pricing that you would want to share with founders that are preparing to list.
Wow, the answer is already blowing in the wind, my friend. The answer is blowing in the wind.
No, seriously, you should say something on this.
IPO pricing is an extraordinary sensitive process. You can only underestimate and assume that only certain people are playing. As a founder, as a management, as a promoter, as a CEO, you have an equal critical role to say. You cannot shoulder it on someone else.
Sure, sure. So that's good advice there. So Gaurav, for you, can AI replace human financial advisors?
No, I think you will definitely see them aiding human financial advisors, but not fully replacing them.
सारे रिप्लेस करेंगे मैं बता देता हूँ 100% रिप्लेस करेंगे मतलब AI 100% ह्यूमन फाइनेंशियल एडवाइजर को रिप्लेस करेगा और वो इसलिए भी करेगा क्योंकि AI जैसा हम यहाँ पे कह रहे हैं ह्यूमंस के अंदर सर ह्यूमन टेंडेंसीज आती हैं
उसका रिस्क कैसे आप देखते हैं व्हाट इज द
मैं
रिस्क
तो ये बोलना चाहता हूँ ह्यूमन ज़्यादा रिस्की है AI से
अच्छा
क्योंकि ह्यूमन के कुछ पर्सनल बायसेस और इंटरेस्ट होते हैं
उसको रेगुलेट कौन करेगा फिर
सर AI सेल्फ रेगुलेट होके आप जो बोल दोगे ना तो उसके आगे बॉर्डर से आगे नहीं जाएगा
चलिए
लेकिन ह्यूमन तब भी निकल जाएगा
okay. Okay, let me get to the second round of this rapid fire. So, sits to you this question: Are there enough investment avenues to absorb the inflows in mutual fund schemes? Do you have enough investment opportunities? We are seeing such a $3 billion comes every month through SIP alone.
Yeah, short answer is yes. And I think even with the kind of our experience that we've had of coming into the market, we have still found different ways of investing in the markets, even within looking at, let's say, the existing categories of funds. So I still think there is room for innovation, especially with using data, technology, AI. There are different ways to slice and dice the investment universe, which haven't been fully explored here in India yet. So the answer is yes to that. And as we have also seen, to your point, from new categories emerging like SIFs, that's already increasing, let's say, the breadth of the offering as well. So absolutely yes.
Sir, I would want one feature in mutual fund industry. जैसे हम मनी ट्रांसफर करते हैं एक फ़ोन नंबर पे, QR कोड पे या UPI ID या बैंक अकाउंट IFSC पे, ऐसे म्यूचुअल फंड का कुछ ऐसा होना चाहिए कि ट्रांसफर एंड ट्रांसफर आउट. Mutual fund investment should be as easy as transferring money in an app. जो अभी नहीं.
So our attempt is towards that,
Yes, sir.
but of course we can always improve.
It should go towards that to a very simplified level, as simple as that कि मैं 10,000 मेरी सैलरी आई, मैंने अपना एक अमाउंट डिसाइड करा और वो मनी ट्रांसफर हो गया. बट वो अभी बहुत लंबे हॉप्स.
एक बार आप करके देखिए, then you share your personal experience. I think then we'll get better insight.
Okay.
You may not be investing in mutual funds anymore. But anyway,
I can recommend you a really good app to do that if you want.
so let me ask one more question now. This one is Vijay for you, and it is a relatively easier question. Sorry for the IPO pricing.
नो प्रॉब्लम सर, वो भी इजी था.
अच्छा चलो ठीक है. So this you will answer quickly. One regulatory change that can unlock innovation.
ओ माय गॉड, ये टफ क्वेश्चन है. इजी कैसे है? सर, आई वुड से allowing more and more innovations through sandbox, where the sandbox is a perpetually on and people can come walk in and try showcasing something and say that sir मैंने ये बनाया, मैं इसको public कर दूँ. बजाय इसके एक sandbox by invitation हो, sandbox is open and perpetual, always on.
Good. So sandbox को improve करें.
बिल्कुल सर, वो innovation को कहीं दिखाए जिससे कि रेगुलेटर या मार्केट पार्टिसिपेंट उसको एक्नॉलेज कर पाए और उसको फिर रिलीज कर सके. एंड दैट शुड नॉट बी hackathon or at a time or approved.
More serious effort on this.
बिल्कुल सर, perpetually on. You walk in and then you showcase and आप कहो सर आप देखिए मैं इसको लॉन्च करने वाला हूँ, एक टाइम के बाद ऑन हो जाए.
So Gaurav, one more question for you. If you had to list in 3 years, one thing that you would start fixing today, although Vijay already advised on that, but your take.
I think more focus on the, I would say, the leading indicators. I think the lagged indicators of the company will take care of itself. And second is start putting out a lot of information around our company, because as Vijay said, a lot of innovative and new forms of companies are coming to the public markets, and you won't have a set prototype of kind of evaluating companies which are going to come to the public market. So start putting out a lot of information around UB in the public market.
So I've been warned that we have to get off the stage soon. So one last question, and this is common for all of you. So you have to complete the sentence. And the sentence starts like this. This is actually what our theme of the panel discussion is. Democratizing wealth creation means. What it means to all of you, so one by one.
Making investing more accessible, affordable, and easier for more and more people.
Inclusive.
Well, I think removing every entry barrier that is there, including and not limited to sometimes which are done for some obligations of system, but every entry barrier should be removed.
हमारे लिए आप काम और बता रहे हैं. So we have to remove entry barrier.
आपने चाहा इंक्लूजन हो जाए और आपने नंबर दिया था 90 करोड़ का, इफ यू रिमेंबर 90 करोड़ पेन है और 12 करोड़ अभी कस्टमर है, तो बाकी जो बीच के 78 करोड़ है उनको लाने का मतलब है कि वो सारे रेस्ट्रिक्शन जो एंट्री के हैं उनको हम उतार दें और सबको
नहीं उतारेंगे, but with risk management.
जी सर, risk
with investor protection. So that is what we always have to be mindful of.
Yes.
I think we are run completely out of time. I thoroughly enjoyed this discussion. I hope all of you also did.
Yes.
Big round of applause for them. Thank you very much.
How many times you would have seen a regulator asking a panel question like this? I mean, sir, thank you so much for inviting us as a panelist. Thank you.
Thank you so very much. Gentlemen, please would you step forward for the group photograph together. Indeed, this has been such an educative and entertaining session, and with so much of insightful information being shared here, I'm sure everybody has a lot to take away from it. Thank you once again, gentlemen.